Countries slip into a recession all the time. Sometimes it's because of a global slowdown, other times it's because the banking sector suddenly imploded. Wall Street got out of hand and the world paid the price. But every once in a while, it's because of a self inflicted wound, a crisis that could have been prevented, but you simply ignore the obvious, which is exactly the situation Europe is in. Now, we have been calling it for quite a while now, and the Eurozone has officially entered a recession. Now, this is after multiple calls from the ECB and analysts claiming that the EU can dodge a downturn. They can escape a dreaded recession, but reality has finally caught up. Kind of makes you really wonder how accurate all these forecasts really are. Now, in our lead story today, even Bloomberg is downplaying the severity of the recession. The Eurozone succumbs to mountains of recessions on energy shock. And what we have is a textbook recession, guys. Europe has suffered 2 consecutive quarters of negative GDP growth. Their economy shrank by 0.1% in Q4 and another 0.1% in Q1. In total, 7 European countries are in recession this quarter. But if we zoom into the Pacific countries in the EU, we can see that Ireland, Lithuania, and Estonia were the most affected. In fact, the Irish economy contracted by a shocking 4.6%. That is a huge contraction. So what caused Europe's recession and why is it self-inflicted? Well, it all has to do with the energy crisis that started long before the Ukraine war. And what we need to do is to dig a little into history to realize the vulnerable position Europe put itself in and the mistakes that sealed its fate. Now let's circle back a few weeks ago when Germany crashed into a recession. We can all remember that. That was the canary in the coal mine. The moment the beating heart of Europe stopped and went silent, that was it for the Eurozone. And the number one reason why the German economy contracted was because of higher energy prices. At the peak of the chaos, they were paying almost triple the cost for electricity versus the rest of the G7 nations, more than Canada, the United States, or Japan. And it's obvious what this led to: the decimation of industries and manufacturing in Germany. Listen to this shocking admission from one of the biggest manufacturers in Germany. We have been naive as a society because everything seems fine. These problems we have in Germany are accumulating. We have a period of change ahead of us. I don't know if everyone realizes this. So what is causing this period of change? And why is Europe in recession? Now the answer is very simple. It has been staring us in the face for over a year. Because Europe has decoupled itself from cheap Russian energy. This is a big deal because before the war in 2022, Europe and Russia, they were huge trading partners. Now forget about China, forget about the United States. Europe was a powerhouse because of their partnership with Russia. And chew on this for a bit. In early 2022, just before the conflict, Goldman Sachs expected the Eurozone to outgrow the US economy over the next 2 years. They saw the EU growing at a 4.4% rate compared to America's 3.5%. Now Europe was strong because they had cheap energy from Russia to really power their industries. Since 2011, they had the Nord Stream pipeline supplying tons of cheap gas from Russia to the entire Eurozone. It's no coincidence that Europe's economy grew tremendously over the last decade. Just look at the trajectory of Europe's economic growth after Nord Stream came online. Their GDP growth was rocketing to the moon. It was going to the moon. Europe and Russia were essentially functioning as one economic bloc. It was so successful that both the EU and Russia embarked on building Nord Stream 2, a second pair of pipelines to power Europe with Russian energy. It was supposed to double the flow of gas from Russia to Germany. But all that has changed. Europe has slapped Russia with tons of sanctions, and the Nord Stream pipelines we all know have been blown up. The Eurozone is essentially cut away from the lifeblood of their industries, cheap Russian gas. And it isn't just gas, it's oil too. Since the sanctions started, Russian crude shipments to Europe has fallen dramatically. It has gone from over 1.5 million barrels a day to 100,000 barrels at best. Now this isn't good news because Europe now has to fight with other countries in the open market to buy energy. They have to pay more for shipments from the Middle East and from the United States. And that's why the EU is in a recession, because of an inflation crisis that isn't gonna go away. Now what we are seeing is a cost of living crisis. The European consumer is too broke to spend anything except on food and on energy. And we're not kidding, guys, it's getting really bad in the Eurozone. Putting up a story from Bloomberg, inflation crisis pulls European countries into a food fight. Things are so bad that countries are beginning to cut taxes on essential food items. Now, we are in a state of emergency where every single cent counts. And consider how bad inflation is in Europe. If you thought it was bad in Asia, if you thought it was bad in America, you ain't seen nothing yet. The official inflation rate in the United States is 4.9%. We know that, but we know it's probably double that in the real world. But it's an even bigger nightmare in Europe. Now, Europe's headline inflation rate is well above 6%, but food inflation is out of control. It's more than double the CPI, it's almost cracking 18%. But wait, the story gets even worse where we dive deep into the inflation nightmare for specific types of food. And this chart shows the increase in food prices in Europe. It covers a spectrum of groceries that you would normally buy in a supermarket. And let's just focus on the EU at the top. In February this year, food inflation was at 19.5%, but for breads and cereals, it came in at almost 21%. Inflation for milk and cheese was almost 30% as well. And this is why we keep saying the consumer is getting destroyed. If your grocery bill flies up by 20 to 30%, you can't spend on anything else. On one side, you are trying to keep the lights on because of higher energy prices. Then on the other, you're trying to put food on the table. You are really being squeezed. Now, you would think the government would step aside and not make the situation worse over there, but oh no, central planners in Europe are now resorting to price caps on food. And this is insane because it always backfires and hurts the poor more. Now, people will start buying the entire grocery aisle and hot food like never before. And what does it do? It pushes food prices even higher a month or two later. This is why Rishi Sunak in the UK is getting flamed by his own ministers. He's asking supermarkets to limit the cost of basic goods. He wants retailers to agree to voluntary price caps for food like bread and milk. Now, the intention might be good, but the mechanism is wrong. It's Twilight Zone economics. Price caps never work, but just the fact that they are being imposed kind of shows us how bad the inflation problem really is. Now, the moment the inflation genie leaves the bottle, it's a nightmare to stuff it back in. And the only strategy central banks have is to hike rates, which will just crush the economy even further. Now, in the report by Reuters, the ECB is still on track to hike rates in June and July. This is dangerous because the EU is already in a recession, and raising interest rates will just destroy demand even further. And this means the EU recession could drag on longer than expected. Now, the ECB has already hiked rates from negative 0.5% to 3.25% today. It has risen by 375 basis points in 12 months and is going to go even higher. In a Bloomberg survey, economists are expecting the deposit rate to hit 3.75% in July and stay there till June 2024. That's another 50 basis points up from where we are today. Now, you might be asking yourself, so what if rates continue to go up? Isn't that the cure for inflation? And guess what, guys? You would be right, 100%. If you destroy demand enough, you can definitely fight inflation. But at what cost? It's like the Thanos snap. You can destroy the problem, but something else will get sacrificed. In this case, it will be European industries that will get hollowed out. Production will leave the Eurozone and it will get funneled to the rest of the world. Now consider these two headlines because it tells you the state of European manufacturing. Volkswagen to build a $2 billion EV plant in South Carolina. A German car powerhouse is moving production to the United States. And the second one is just as interesting. Airbus to double production in China as it moves ahead with new orders. The French playmaker, the biggest in the world, is launching a second assembly line in China to produce more planes. Now, why are companies in Europe moving production to the United States, moving production to China? It's because Europe is facing a stagflation hell. We are talking about a period of high inflation and slower economic growth. And because of the energy crisis, European industries can't stay competitive in manufacturing. And because of high interest rates, the cost of production goes up even further. But let's analyze why Europe's loss is the world's gain. Why is the United States winning, and why are EU companies also moving all the way to China? And there's a reason why European companies are running to America, and it's because the US has unleashed incredible incentives for companies. If you're investing in green and renewable projects, you pay less. We have heard of this before. It's the Inflation Reduction Act. It gives the US such an advantage that France and Germany actually went together to Washington to complain. If you are a German or French company, the choice is very obvious. Stay in Europe where energy costs are higher, or move to the US and enjoy huge subsidies. And this isn't chump change, guys. The funding includes $10 billion in tax credits, $2 billion in grants for car makers, and $20 billion in loans for manufacturers. And according to Goldman Sachs, the real cost of the subsidies will reach $1.2 trillion. That's a ton of money that will lure EU companies away. And that's why, as we move towards a green future, America will be winning while Europe will be losing. And the situation for China is even more straightforward. It's all about access to cheap Russian energy. Companies like Airbus, they choose to manufacture in China to simply save costs. Now, while Europe was busy sanctioning Putin all the way to the Ice Age, all the way back to oblivion, China is buying as much energy as they can from Russia. Now, just in March alone this year, Chinese imports of Russian oil hit a record of 2.2 million barrels per day. And you can bet they aren't paying full price for the oil. China is still enjoying a good price from Russia. They are paying $10 a barrel less than the benchmark rate, which is around a 13% discount. And that's why it's a no-brainer decision for manufacturers in Europe to move operations to China. Manufacturing is all about a game of margins. You either pay more in Frankfurt or you pay less in Beijing. But let's talk about the global economy for a bit. Europe is slipping into recession. I mean, yes, already entered a recession, and that isn't good news for the world. And we shouldn't be cheering, guys. We should be very concerned. If demand from Europe keeps cratering, every country will be affected to a certain degree. Now, the straws are being stacked on the camel's back, and sooner or later, the camel's gonna collapse under all that stress. The hot war in Ukraine is still going on, central banks are still hiking rates, and now the world's third biggest economy, the economic bloc of the EU, has fallen into a recession. And the clear sign we have that it's coming is Saudi Arabia desperately defending its revenues. They have cut another 1 million barrels per day starting in July. So if you think this inflation crisis is over, stay tuned for the second season of higher prices. Higher inflation means higher interest rates, and when the cost of borrowing goes up, economic growth starts to slow. It's a very simple principle, and the longer this drags on, this economy built on credit will eventually crumble, and the next shoe to drop will likely be the US economy. Now, why do I believe this? Other than the obvious effects of rising rates, is because the mainstream media all believes the US economy is bulletproof, it's untouchable. From CNN, the case for 2023 US recession is crumbling. Sounds very optimistic to me. Then we have Goldman Sachs lowering their recession probability to 25% after the debt deal. Don't worry, guys, the soft landing is coming. The economy is fine, and everyone here on this channel is apparently hallucinating. We are the ones who are delusional. We are all fear mongers when we all should be blindly bullish. And you know why is that? Because they are pointing to the jobs number once again. 339,000 new jobs in May were created, and that looks like a booming economy, doesn't it? I'm sure all these are high quality jobs that all pay six-figure salaries each, right? And if we look at the jobs report, there's a surprise rise in jobs opening to 10.1 million in April. But let's assume all these numbers are genuine and companies are really looking for workers. Even if that's true, all these jobs numbers, they are all lagging indicators. Employment figures don't predict the future. It's like looking through the rear view mirror. By the time the numbers flash red, the economy is already well into a recession. Wall Street is using it like a leading indicator when it's not supposed to be. Europe's employment numbers were great, right? But they still couldn't escape a recession. Job figures are the last dominoes to fall. So will Europe recover? Let's circle back to the Eurozone. Can they head back to a strong positive growth? Because they are obviously facing a stagflation hell today, right? Their economy is in a recession and high inflation is clobbering the consumer to the ground. Whether the EU can escape depends on getting access to cheap energy. And it's a race against time because winter is coming. The White Walkers are coming again in 6 months. Now, last winter was mild and Europe survived largely due to luck, but it's going to be a coin toss this time around. Now, what's really interesting is Olaf Scholz announcing his plan to speak to Putin over the phone. I think this underlines Europe's weariness of the war and maybe a secret desire to access cheap Russian energy once again. Now, will Russia ever sell gas to Europe again? I'm not so sure, but we might be past the point of no return. So hang tight, guys, because it seems economies are starting to fall like dominoes. I don't think we have even seen the true damage of high interest rates yet. And if the Federal Reserve hikes interest rates next week, then we can kiss goodbye to a soft landing. But let me know what you think in the comments below. Will Europe ever recover? And is a global recession coming soon? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.